Okay, so we had a new all-time high. Yesterday we gapped up. So coming into the day, my first thought was we're probably going to close this gap. And I'm going to make a video after this really discussing there's confusion on always in. I say in my videos that everyone should understand always in and use it as their foundation. And I hold true to that completely. But what people have to also understand is you can't be concrete about it. It's not as simple as, you can't be systematic about it. You have to be subjective. So anyways, I'll explain that in the next video. Anyways, coming into today, big gap up bar one. The one thing I'm expecting is sideways to the moving average. I sold below bar one. I actually got out above bar one. I was hoping for an endless, just kind of 30% chance we just sell off real quickly. In hindsight, I probably should have gotten out during the close of this bar. If you were listening in the room, you heard Al mention he sold a pullback, got out. But nonetheless, here, probably always in long. However, maybe here, odds are to get a second leg up. I was not willing to buy because, again, new all-time high. I was expecting us to go down the moving average. So I missed this whole rally. Ended up selling somewhere in here. Got out above this bar. I think I went long above the bar, which is a little aggressive, and got out below this bar. And that may have been, I think I bought here and then got out pretty much break even here, in which it was aggressive, but I sold the close of this bar stuff up here. I decided not to get out. Didn't get out above that, never triggered, as you can see. Got out somewhere in here. So either way, overall, kind of had a spike pullback kind of channel. Leg one, pullback leg two. Here's the spike. Here's the channel. 1, 2, 3, maybe 1, 2, and 3. Ended up testing the gap here. These days they're tricky. They're definitely tricky, and it's not clear. Again, here's the open. Let me put it this way. Here's the open of the day. Right here. That's the open of the day. Make this real obvious. What do you notice about this line? We go below it, we go above it, back below it, above it, below it. We spend all the way until almost 1 o'clock. So the majority of the day in a band, a little below the open, a little above, a little below, a little above, and then we finally sell off. So, and that's expected. There's no there's no strong breakout, there's no strong follow through. So I don't have a lot to say about this day. In terms of always in, and again, it's subjective. The one thing I'm not an advocate of is you sell below here, you buy above here, you reverse to short here, you reverse to long here, and then you reverse short here, you reverse to long, you sell, maybe you reverse to long here, you reverse to short here, reverse to long there. Because that all sounds great, but it's not practical. Most people won't do that. It's too much work. It's too easy to get screwed up. Most people trade a form of always in that's selective, and I am gonna make a video over that. I'm gonna call it selective always in. Be on the lookout for it. It'll be published the same day as this video. And I really want to explain my true how I really think of always in, because I think the name always in is misleading, especially for people starting out. So I'll cover that in just a minute. But overall, kind of an interesting, I thought it was a pretty standard day. So one of the ways I use always, just to kind of be even more clear, how did I use always in a day? Well, I wanted to sell below bar 1. I had zero interest in buying above bar 1 because the moving average is all the way down here, price is up here. So we get this big bar, get this follow through bar, and then my thoughts are, okay, so I don't want to buy up here, I only want to sell, but I want to stop entry short. I don't want to just sell. That's not good enough. I think I actually put a limit order, I put a stop order to sell below the bar, but it never triggered. And you know, up here, I don't want to sell. No bar to sell, no bar to sell, no bar to sell. Do I sell this? Maybe, but it's a pretty tight micro channel, so not a great sell. And here, 1, 2, 3, maybe an 8-bar micro channel, but it's kind of a nested wedge. 1, 2, 3. So you could sell here, probably want to use a wide stop. It's a small bar. Al talks about in his videos, when you have a small bar, use a wider stop. High one buy, bad buy, and then we start to trickle down. And what do you notice about the sell-off? It's kind of an endless pullback where we get a bear breakout, but it's not a clear, it's not an easy sell. And look, basically we had a bear breakout below an endless pullback, broke to the downside, tested the lows. And one of the things to point out here is it's not an easy short because it's forcing you to sell after a tight channel, just as here, kind of forcing you to buy after a tight channel, even though it went sideways for a couple bars. So that's all I really have to say about this day. It's, you know, one thing I would maybe highlight about the day, because this happens fairly frequently, is very often, here's kind of a reasonable trade you can take, especially on a trading range day. It has to be on a trading range day though. You take the open, you take the low, project a measured move from the open to the low projecting up, and you look to sell somewhere around here. And you can do this one or two ways. You can say, okay, the open of the day is 66.25. This is, let's just say, 72.50. So for simplicity's sake, let's just say the open is here. This is 6 points up. I'm going to sell with a limit order, and I'm going to risk 6 points to make 6 points. You've probably got a 60% chance at a minimum, probably better than that, that will test the open before we go 6 points higher. I think a lot of traders will do that. And yeah, so anyways, that's all I'm going to really say about this day. Pretty boring day. A lot of trading range price action. Thanks for watching.